Income Tax Act allows Canadians to get refund from taxes older than 3+ years. Why Canadians missing it? Did you know you might be able to go back up to 10 years and fix your tax returns? And potentially recover money you never claimed? And no, this is not a loophole. It's a legitimate process allowed by the Canada Revenue Agency. Most Canadians have never heard of Taxpayer Relief Provisions. This allows the CRA to cancel or waive penalties and interest, accept late or amended tax elections, issue refunds or reassess tax returns beyond the normal time limits. The most powerful tool is Subsection 152, 4.2. While the normal reassessment period is only 3 years, this law allows the minister to authorize a refund or reduce your taxes for up to 10 years if the adjustment is correct in law. But the real question is, why do so many Canadians overlook this? Most Canadians either don't know this exists, think it will trigger an audit, assume it's too complicated to deal with, so they leave money on the table. However, these concerns are merely misconceptions and common myths. What keeps many Canadians from understanding this legislative right? It comes down to 3 main reasons. First, it's not automatic. Programs like taxpayer relief aren't applied for you. You need to ask your accountant to know about them and request them. Second, it sounds intimidating. Anything involving the CRA can feel risky. Many people worry, if I touch my taxes again, will I get audited? And third, it's not widely promoted. Unlike benefits or credits, this is more of an administrative provision, meaning it's available but not heavily advertised. In this video, we will break down when can this provision be needed, why Canadians think it triggers an audit, why professional expert help needed, what can actually be claimed or adjusted, what's best time to review your taxes, when can this provision be needed? This provision becomes important the moment you realize something was missed in your past returns. Most people don't even realize they've missed something until years later. It could be unclaimed credits like medical or caregiver expenses, disability, spousal amount. It could be deductions you didn't know you qualified for, like RRSP, childcare expenses. It's especially useful if your financial or personal situation has changed and you now qualify for benefits you didn't claim before. Why Canadians think it triggers an audit? Let's clear this right now. The CRA can review your return at any time, whether you make changes or not. Reviews can happen because your info doesn't match employer records. There are unusual changes compared to previous years, or sometimes completely random selection. Even getting a refund doesn't mean you're safe from review. Adjusting your tax return does not automatically trigger an audit. The CRA allows corrections because people make mistakes, information comes in late, things are simply missed. In fact, correcting your return can reduce risk, not increase it, because your information becomes more accurate. What's best time to review your taxes? The perfect time to review your return is after tax season like now, because this is a rolling 10-year window. Every single year, the oldest tax year disappears permanently. If you wait, you could lose money that's already yours. Why? Because everything is still fresh, mistakes are easier to catch, and you're not rushing under deadlines. What can actually be claimed or adjusted? A lot of people think this is only about small deductions. It's not. You can adjust your return to report missing income, for example, a forgotten T4 or tips. Claim deductions or credits you didn't include, like childcare, medical expenses. Add missing contribution receipts, like RRSP, union, or professional dues. But here's something many Canadians don't realize. Your personal situation matters a lot. If your marital status changed, for example, you got married, separated, or divorced, and it wasn't updated properly, or if there were changes in child custody or dependence. Separated parents caring for children may also claim single-parent credits and CCB. The CRA can actually go back and reassess those years based on the correct information, and that can directly impact the benefits and credits you are entitled to receive. Retroactive credits. If you or a dependent qualify for the Disability Tax Credit, DTC, once approved, the CRA can go back to previous years and reassess your returns. That can lead to significant refunds. And this is exactly why so much money goes unclaimed. Most people file based on what they know at that moment, not realizing that changes in their life could affect multiple past years. Also, many Canadians misread certain lines on their T4, overlook smaller credits that add up over time. Why a professional expert is often needed. This is where things can go wrong if you're not careful. Adjusting past returns isn't just about adding a missed expense. Reviewing up to 10 years of tax returns isn't a quick scan. Each tax year has different rules, different limits, and different eligibility criteria. What applied in 2018 may not apply the same way in 2022. As this is a discretionary process, an in-depth 10-year review using specialized tax professionals is required before filing. Specialized professionals ensure a methodical approach, analyzing each year individually to identify missed opportunities while ensuring all claims are defensible under discretionary processes. This level of precision is where true expertise matters and where family tax recovery excels. This isn't guesswork, it's precision. The CRA evaluates your legal eligibility for a claim, not just the claim itself. How family tax recovery helps. Family Tax Recovery is a Canadian firm dedicated exclusively to reviewing past tax returns to uncover missed credits, deductions, and refunds. With more than a decade of experience, they've helped Canadians recover millions of dollars that would have otherwise stayed unclaimed. Their strong reputation is reflected in their 4.4-star Google rating. While your accountant focuses on filing your taxes each year, Family Tax Recovery specializes in something different: a comprehensive, retrospective review of up to 10 years of your previously filed returns. Their team applies deep knowledge of tax law and historical changes to identify opportunities that may have been overlooked. The best part is that the review is completely free. There are no upfront fees. You only pay if they successfully recover money from the CRA on your behalf. If the government owes you money, or if you simply want to know what you've been missing, get a professional review of your past tax returns. Visit familytaxrecovery.ca to sign up for a free 10-year tax review. Optional disclaimer. This video is for informational purposes only and does not constitute tax, legal, or financial advice. Always consult with a qualified professional or the CRA for your specific situation.